Hello and happy new year. I am Sinon and it is 11:20 South African Standard Time. So today I wanted to do a quick update on I believe UK 100 and to touch on a couple of things which I found very interesting by the way. So this is, by the way, the current wave count or the major wave count in my books for UK 100 on the 4 hourly time frame. So, as you know, my data vendor, the one that I use more often than not, is FXCM. So, if you look from here, which is like 8,000 GBP, we had like a five wave, count to form wave one of the minuet degree, and then we had a double zigzag to the downside, which was very deep by the way. And then that was wave two, and of course we do expect this once in a while from wave two to be very deep, especially when people are expecting the worst of the market. So since then, I think at 8017 we bottomed, and then we have been, in a rally again. Like I did ride this third wave, by the way, when it was like unfolding, because I caught it here, if I recall. And then we had our wave four, although our wave three didn't reach the 1.618 Fibonacci, which I expected it to reach, because like that's often the case, anyways. And right now we have completed wave four and we have Elliott's final channel in place. So if you don't know what's Elliott's final channel, it connects the extremity of wave two and that of four, and then you draw a parallel line of that, by placing it at the extremity of the third wave. The initial one uses the first wave and the third extremities, and then that of wave two in order to predict the extremity of the fourth wave right here. So right now, this is the current count, which means we're expecting wave five of one. So the wave one currently that is unfolding is of the subminated degree, which is degree 12, I believe, because this is 13. And then the degree, below that it's 14. And then the last one, which we mostly have, will be 15. So this is on the 4 hourly time frame. Now, this is the long-term outlook, by the way, starting from 74.23 as our bottom here. We have wave one of the minute degree, and then wave two. We also have wave three. If you check here, we have one right there, and then we have two, and then we have triangle. We have three, and then triangle wave four, and then we had an extended fifth wave, which ended somewhere there, and then we had one, and then two, and then we had right there three, and then four, and then the fifth wave, and the decline of the fourth wave of the minute degree, which is degree 10, and then we had an extended fifth wave. So when it comes to extension, I think I should touch that most of you, when you are like talking about wave extensions, will often think about, say, the exaggerated size of the wave. Well, we don't only look at that. We look at the time a wave it takes. We look at the size, of course, as most of you know, like the size of the wave. And then we look at the size of the subdivisions. Jeffrey Kennedy, in his book, alongside Wayne Gorman, says an extended wave will normally have, the subdivisions that are equal or greater than, the ones like of like the major occurring degree. For example, say here, this third wave right here is extended, but not in the in terms of size, but rather, not in terms of price it covers, but in terms of size. Look at this wave one right here. This wave one is almost equal in size with the wave one of the minute degree. This is one, and then two, and then look at the third wave right here. It's even greater than this wave one, which is also an extension. And then look at this one. It's extended mostly in terms of what, of the price it covers rather than the size, because you can barely see the subdivisions here on wave 5. So that's our wave 1 right there, and then wave 2. Now this is not a triangle, but it's just a chart pattern. I have demarcated using this rising trend line and then falling trend line right here. I expect that, given that we have this high and we have had this struggle right here, which is like a clear resistance zone to me when I'm applying support and resistance, I think we will get that bit of a resistance, and then say maybe once we've broken above, we get again like support somewhere here, because you can see the market, which became like this level, which became a resistance, will often change to become, support, which is what we call a change of polarity in the case of support and resistance. So we have here the candlesticks. We have currently, I think this candlestick just closed, because by the time I took this screenshot, it was like only 5 minutes remaining and 40 seconds, for it to close. So, which is a good thing, by the way, given that we have closed above this resistance level. So this is also a change of polarity, resistance becoming support. So this is often good for people who are trading and understand well the wave principle, because to them, they're expecting the market to kind of push down right here and find what? And find that bit of a support. But at the same time, if you check the wave count right here, it's likely that we have one and then two. I will show you just now. We have one and then two. And then this is the third wave if you check the size of the candlestick, because also the volume down there was rising, of course. It won't rise to an extent that it takes out this one. I highly doubt, but also chances are our wave 5 might extend, given that this one didn't reach the 1.618. But right now, I do think we'll find that support and then we push higher here in the UK 100. And then another thing I should touch on is that we had this bullish engulfing. This is, by the way, bullish engulfing, if you know Steve Nissen's work, but this is not the typical one you would find, just like this one right here or this one. Sometimes these candlesticks will have an equal price cover. Like the price it covers will often be equal at times, but still it's called a bullish engulfing in this case. You see, this one is a bearish engulfing, a clear one, but this one as well. But Mark Hutchinson would say it's like an hourly retrace candlestick, which is still fine. So if you check it, and then we had this guy right here, which showed, like the resistance of lower prices or rejection of lower prices. And then you check these guys right here, which are also bullish shadows. They are not that big, by the way. But what matters the most is the fact that we have closed above here, and your stop loss if you are someone who were to trade. In fact, let me not say yours, but mine. If I were to trade this, it would be here, right here, just below these two lows, because this is what we call the tweezer bottoms, if like you understand candlestick patterns, because the lows of this candlesticks right here are almost equal or equal. And then we have the 1 hourly analysis of like Elliott Wave analysis. Well, what I didn't like about this, you see, because we had already closed here on the hourly, was the fact that I made a mistake. This is supposed to be the end of wave 3 with a truncation right here. This is wave 1 and then 2, and then we had 3 right there, and then we had 4, and then we have 5 somewhere there, and then we have a flat wave 4. So what is interesting is the fact that our third wave didn't actually reach the 1.618. And secondly, we had our wave 4, which became a flat. Now, what happens with flats is that flats often precede a wave extension or follow a wave extension. So in this case, because we didn't see a wave extension, I believe this flat wave 4 is, indicating that we might get an extended fifth wave right here. And this is possibly true today, given that the US indices are closed. There's like I don't think we'll be able to trade, given that there's like a funeral of a former president, I believe. So I think we're going to have a strong, fifth wave today. I don't know. This is like not a financial advice per se, but I'm just, suggesting. So this is the corrected one. As you can see, this is 1, 2, and then 3, and then wave 4, respecting the Elliott wave rule, that wave 4 cannot end in the price territory of wave 1. Again, cannot end. It can enter, but cannot end there. That is, in the case of a triangle, wave A right here can enter this price territory and then, be at the top, and then C, maybe it can enter, but chances are when wave A has entered, C won't. But what matters the most in the case of a triangle is that our wave E closes outside of the price territory of wave 1. Again, this is not a diagonal. This is not a diagonal. This is wave 1 and then wave 2, and then 1, 2, 3, and then 4 right then 5, and then 4, 5. This guy Robert Ballan spoken did mention this in his book, titled Elliott Wave Principle Applied to the Foreign Exchange Market, that sometimes it will happen that an impulse will resemble a diagonal, and actually the trend lines, are connecting the extremities of wave 2 and 4, which is in this case, it would be here, 2 and 4, as well as the one that connects the extremity of wave 1 and 3, which is in this case, it would be here and here, will often, kind of contract or expand as if it's a diagonal. So in that case, it's often signaling what like a dramatic reversal ahead. As I said, as you can see, we saw a reversal here, although it was not dramatic. So right now, I'm anticipating that the UK 100 it should go higher, at least above 8,350 GBPs. I don't know, but these are my expectations. I think we should take out, this previous high right here, which is wave X of a double zigzag. And I haven't been around, but I believe I will be back, full time again soon, soon, soon. And I will be releasing here on my YouTube channel for Wave 3, as well as Elliott Wave by Shane, which is also another YouTube channel by my friend and mentor. So you better, watch out, because I will be super, super active. You see, look at it here. I wanted to touch on this part. Look at it here. If you check your third wave, you check your third wave, there it is. It didn't reach, the 1 point. Wait, let me just switch off this guy right here. It didn't reach the 1.236 retracement. It failed, in fact, even with the third wave, because you can see we ended with the truncation. You see, we were like far, far from reaching the 1.618. So even if we change the scale to logarithmic, it changes nothing, because I think it's good to use the regular scale in the case whereby it's like lower time frames, as Prector said in his book. But just for bigger price action now, you want to use the semi-log so that you can see all the data clearly and kind of equally so, or equidistant, I don't know. So you can see 1, 2. So I think right now our holding invalidation level should be this one right here. It should be this one right here. You see, I think this is where the market should not, go below, because you can clearly see how we went above, this high right here, which I think we had a flat, wave 2. So I think this is 1, 2, or 1, 2. And then we have like the third wave still unfolding, which can also be done, by the way, in case we end in. It can be done, because again, the 1.618 is a guideline, not a rule. The third wave doesn't have to reach the 1.618 in order to be a third wave, as long as it's not the shortest in the case of an impulse. It can be the shortest in the case of an expanding diagonal. Again, it can be. Read the rules in the book by Robert Prector and Frost. Read the rules. The latest edition was released in 2022. Just visit www.elliottwave.com and you will get the free online version there. So I think that was it for today, ladies and gentlemen. Please, if you have not subscribed to this YouTube channel yet, I think I would love that you do so, because I will release, I believe, because I've been working quite a lot before I got sick, because I've been sick for quite a while now. But I believe I'm back. I'm back. I have been sick. I've been sick like the Christmas. I didn't enjoy it. So, but right now I think I'm back. Have a good one.